talk to some of the slides I have for some of the colleagues not familiar with us. Branch South Africa, we're located in the Presidency of South Africa, agency of government. We're the official marketing agency of the brand of the country. So we do quite a comprehensive piece of work in terms of understanding who we are from a societal, cultural, economic point of view, and then pushing that into specific marketing, communications, engagements, stakeholder engagements, of which something like this, our long-standing partnership, is very important because it's a very important business community. And one of the messages I said to you as we were planning that I want to get out in the first instance, we are in very unusual times. So from the side of Brand South Africa, we really want to thank the business community of South Africa, how everybody has come to the table of responding to a global pandemic in our environment. So really a big word of thank you to our colleagues out there. Now, going to some of the slides I have prepared, maybe just also to illustrate, because typically at these sessions, I would share a bit of the research insight, some of the work that we are doing. So in the last few months, as everybody, we've been confronted with this pandemic and its impact. And kind of the third point on the slide you see there is a document we put together that we will share with all the participants after the session with the theme collaboration as mitigating factor. And what we did in there is to look at the domestic environment, impact of COVID economically, policy-wise, but also at a lot of the global dynamics that are confronting us. And I think South Africa's top brands as global players, as multinationals, as companies that have a footprint in a multitude of markets, we are also very aware of and asking very serious questions about what's happening in the world environment and how do we prepare for that going forward. We can go to the next slide. Declan. Basically, in the last few months, we've become, if anybody had to approach planet Earth from outer space, we should have put the billboard up out there saying, sorry, we are temporarily closed, because, you know, there was a scenario where about 50% of the world population at a certain point in time was under some form of lockdown or restricted economic and social activity. That is a totally unheard of condition. Even in conditions of world war, typically a war economy transplants a peacetime economy. But now you did not have that situation. So if we go to the next slide, that then means, as an organization tasked with the job of marketing and positioning the country, we really need to be aware of what's happening in those global spaces. Just one point I want to zoom in on this slide, to be very brief about it, is that then through that environment analysis document, we've been sharing it extensively with our stakeholders to generate discussion and to call for input. Because as Brand South Africa, we cannot do our work if we do not are not connected to business communities, civil society communities, to understand what is happening out there and how do we engage with that. So actually the crux question we have is what cross-sectoral, creative and constructive engagements are needed to chart a path into the seemingly turbulent horizons of the future. And I think that's a topical issue now as we face many challenges as nations, as people. And I think our president has been giving the lead on this, where we follow a lot of these positioning around this. And I think in one of his communications recently, you know, he emphasized the point that building on the cooperation that is being forged among all social partners during this crisis, we will accelerate structural reforms, reduce the cost of business. I think we heard the Minister of Finance's emergency supplementary budget speech, a lot of debate about that out there. But I think one of the clear messages that came through is we remain focused on structural reform. And there's no more illusion about the fact that the crisis that we're in now has accelerated a lot of the challenges that we faced as a country, for example, on the front of our debt to GDP ratio. So there's some very serious issues that we have to confront. We go to the next slide. Basically, the question here is now the pre and post-lockdown globe. If we take it now 2020, pre and post-2020, the question is, are we facing more of the same? Or are we anticipating more market mayhem kind of at an interstellar pace? And if we go to the next slide, we start digging into just some of those key dynamics out there. And I think it's important, sometimes we're in the midst of a crisis, we're still seeing early numbers coming through from global markets, domestically and so forth. However, one thing that's very clear is that the period after the global financial crisis already I call it a bit of a joke up there that the post-global financial crisis world and the pre-COVID-19 world already turned down cardiac arrest avenue. It's like a heart attack could be preceded by a series of smaller heart attacks. I think we had a series of very small heart attacks post-global financial crisis in the form of things like trade wars, in the form of attacks on the system of a free and fair global trade. We have seen rising tensions in regions of proxy war, whether you look at Libya, whether you look at Syria or Yemen or Afghanistan or Iraq. 2020 opened, by the way, by the assassination of General Soleimani by the United States in Baghdad. I think that was a big opening to this year on the geopolitical front. And I think it's just interesting to notice that in a period of global pandemic, the geopolitical tensions are increasing and the military positioning is increasing. So I think what we are anticipating is a world of enhanced conflict and probably deepened conflict. If we go to the next slide, and I think those are all the dynamics that impact not just on country brands and country policy, but it directly impacts on corporate strategy. As I indicated, a lot of our South African companies have tremendously strong global footprints as multinationals, and I think they play in that space. And these dynamics also then feed back and impact on our country brands in the form of an MTN or a Stanbic or a Shoprite or whoever. Now those pictures really just frame that period, you know, of the pre-COVID world. I don't think we need to dwell on that too much, but just really snapshots of the world we were already in. If we go to the next slide, what we move towards then is then, regardless of the pandemic, we see these rising tensions. And I think this just reinforces some of the interesting questions that we've been asking. I'll give you a practical example. In the last month or two, a debate among ourselves and colleagues at the DTI and in Presidency and DIRCO is a question on South Africa's manufacturing sector, because there's a well-known question now on global supply chains moving forward post the global pandemic. Are we going to see a reshoring of manufacturing in particular jurisdictions? And I think South Africa is very competitively positioned from a perspective of our manufacturing base, our financial services and infrastructure base, I think, to provide a very interesting platform for development of supply chains into the African region. So also in terms of our relationship with Asia, I think there's very important questions to be asked. The epicenter, some people talk about the epicenter of global growth. We don't know what it will look like post-COVID, would be the east coast of the African seaboard, Indian Ocean towards Asia. Let's see how that pans out. We can go to the next slide. I think also maybe, and I'm heading towards the end, I don't want to take too much time. I think some of the key risks that we are facing is uncontained pandemics and then insufficient economic policy arsenals. I think very few countries can claim that they have the correct either public health system capability or public finance capability to really deal with the impact of the virus. However, systems now have to adapt as we move on. And then the geopolitical condition. We can go to the next slide. And then lastly, a message that I would like to put out there is that, you know, when you approach Earth from space, astronauts are taught one lesson, that there's no up or down in space. So we live in a world where we think north is up and south is down, when it's actually not true. So if we look at the world from space, South Africa may actually be at the top. So I like to say, let's keep South Africa at the top of the world, regardless of these challenges that we face, top of mind. And I really want to say that our top 50 brands and the announcement later on is going to be very interesting. And Declan will also talk about some of the global dynamics that will be very interesting to engage with. But the point is that the top South African brands are really economic ambassadors of the brand of the country. A few years ago, Jeremy and ourselves, we had a whole conference on country of origin, and the country of origin impact on corporate brand and country reputation is a very interesting domain that we are very interested in as an organization. So once again, congratulations early on to the top brands, but I think more importantly in this time, let's find those new and inspiring ways for us to grow and to respond to a crisis that is deep, but I do think we have the capability to emerge from it. Thank you.
Thank you very much, Dr. Petrus de Kock from Brand South Africa, for laying the land for all of us there. We appreciate that. So I will now be introducing the Brand Finance Most Valuable Brand Study and uncovering the core methodology behind the study. As you can see on the slide here, we've outlined our methodology, and at Brand Finance we use a methodology known as the royalty relief methodology. This is the preferred methodology of courts and tax authorities and is backed by the ISO standard 10668 as well. The principle behind it is that if you didn't own your brand, how much would you pay to license it? And therefore, by owning the brand, you're actually in effect making brand savings. There are 4 key pillars. The first is the brand strength index, and that is a composite index where we use a variety of different measures covering multiple stakeholders to benchmark the brand against a competitor set. This then gives the brand a strength score calculated out of 100, but more on this a bit later. We then apply that strength score to a royalty range in pillar 2. And this royalty range is applicable to each individual sector and indeed product line. For example, if retail banking has a royalty rate range of between 0 and 5%, and your specific brand has a brand strength score of 80 out of 100, then your brand specific royalty is 4%. We then apply that rate determined for the individual brand and company to the brand's forecasted revenues to determine revenues attributable to the brand. These then are finally discounted to a net present value, which is what we determine to be the brand value. Now, we often get asked what is the primary difference between brand strength and brand value. The good way to think about this is that brand strength reflects the perceptions of the brand among all stakeholders, not just consumers, as well as various metrics that make a brand tick. You can see some of these metrics on screen here. Whereas brand value is the actual financial value placed on the brand that can either be bought or sold in a financial transaction. So brand strength is actually used as a component in the calculation to calculate financial value. So this slide shows a breakdown of the brand strength index, which we split into 3 pillars based on the perspective of a brand owner. So as a brand owner, one would want to see, firstly, high levels of brand investment. So that could be into products, advertising, increasing share of voice and the like, with the hope that that would then translate to higher brand equity. And as mentioned, that's not just brand equity amongst customers and consumers, but amongst all stakeholders, including staff, financial and other external stakeholders. A high level of brand equity would then translate into a high level of brand returns. And these returns are expressed in the form of increased loyalty, increased price premiums, better revenues, and better margins for the brand as a whole. And you can see some of our sources on the right-hand side of the screen, and some of the data partners that we have partnered with over the years. Part of the inputs into that brand equity piece, and specifically the customer piece within brand equity, is our global market research. So we have conducted market research globally and indeed in the South African market for the last 4 years now. This research covers the typical marketing funnel from awareness through to recommendation, as well as a range of various emotional and functional attributes important for brands, which you can see on the right-hand side of the screen. Within South Africa, we currently are covering airlines, banking, insurance, and telecoms from a consumer perspective. And for the last 2 years, we have expanded that research to look at a business-to-business viewpoint, and we are covering the banking and insurance industry with that respect. Now, this slide here shows the top 10 most valuable brands in the ranking for South Africa for 2020. So a massive congratulations to all the brands that have made it into the top 10 this year, and indeed the wider top 50. As you can see, MTN retains its place as the most valuable brand in South Africa, with a value of 49.4 billion rand. And this is largely driven by improved consumer perceptions of the brand according to our market research. Furthermore, it's driven by scale. MTN has a vast range of operations across the continent. As you can see, there's not a huge amount of movement within the rest of the table in terms of ranking and positional changes, although there is a significant amount of red that you'll be able to see on screen here in the brand value change column, indicating year-on-year declines. However, the reality is that much of the change is as a result of the risk climate in South Africa. Things like weaker currencies and credit rating downgrades are all factors that work against all South African-based brands and indeed other business assets operating in South Africa. We do have a short message for you from Rob Shooter, who is the Group CEO of MTN, as he talks about the success of the brand throughout the years of the ranking.
Hi, this is Rob Shooter from MTN. We're really pleased with our progress in the Brand Finance Top 50 South African brands. Encouraged to be appearing top of the list again as the most valuable brand in South Africa. I think what's more important though for us is actually that we've made progress year on year. Particularly we've seen that in the BSI scores. I think this is a combination of a few things. We've worked really hard on the customer experience. We really believe that a brand is what a brand does. So it's not so much about marketing or advertisements. It's how our customers experience and feel the brand out there in the markets. Are we easy to do business with? Are our propositions tailor-made for them? Is the network quality really good? So we've worked hard on that, as I've said. But I think also we really believe that our people are ambassadors for the brand. We like to say that at MTN we're a belief-driven organization. Our belief is that everyone deserves the benefits of a modern connected life. So that's very much about inclusion, shared value, connecting people to the power of the internet, connecting them to each other, rolling out our mobile financial services businesses, which is around the topic of financial inclusion. And what we try and do inside the company is to connect our people to the fact that we are trying to do something that's worthwhile, that's meaningful, that will make a contribution in society. And we think that if we've got believers, then we have patriots instead of mercenaries. And this is so important because in the end, our people are also the ambassadors for the brand. So how they respond, in the market, how they service our customers, how they build propositions for customers, even how they organize the company to give our customers a fantastic experience is so important. And in a way, the brand is something that glues all of us together. And that's complex even sometimes in large companies in one country. We have the challenge of trying to deliver this across 21 markets. We service almost 260 million customers, and we have just our own people, almost 19,000 people, and of course very many important partners and service providers across the markets. So if we can deliver a belief that what we do is important, if we can deliver a faith and a confidence in the brand and a sense of personal ownership in the brand, then I think we start to see the kind of improvements we've seen in the last few years, despite some difficult markets and some difficult events as well. I think for MTN, we're really just at the start of this. Our work's not done. I know every time I say that the customer experience is improving, a lot of people kind of get onto me on social media with all of their personal experiences that have not been great. So, we're not resting on our laurels. We're encouraged with the progress, but, we're going to keep on going, building the faith, building the experience, and I guess also recognizing the importance of our marketing, our above the line, below the line, in terms of telling our story in an impactful way. Because in the end, telecommunications, I guess, in consumer speak is a commoditized category or a very busy category with lots of people competing. So there is a kind of a duality, I guess, of not only having a good story to tell that you're offering a great experience, but finding an impactful way to cut through the clutter and get that story across. And that's also been a big focus of ours over the last few years.
thanks to Mr. Schutzer for that insight. So on this slide here, we have the value within the table broken by individual sector, as well as the top 5 strongest brands on the right-hand side of the screen, according to the Brand Strength Index. So what's interesting to note here is the dominance of the banking and telecom sectors, which cumulatively account for 45% of the total value within the South African table. This trend has persisted since we began the rankings within South Africa in 2010. And as mentioned on the right-hand side of the screen, you can see the top 5 strongest brands in South Africa. Particularly interesting to note that 4 of these 5 have improved their brand strength year on year under difficult circumstances. And Vodacom, being the strongest brand in South Africa this year, according to our research, is in fact also the most familiar brand amongst all consumers. So a lot of consumers are both aware and familiar with the brand, given the exposure that the brand has across the country. I know Vodacom added approximately 500,000 customers to their user base within the last quarter as well. Capitec falls very marginally from first to second this year. And in fact, according to our global research, it has the 6th best reputation among the banking industry globally. So that's not just in South Africa. And that does account for biases in country responding as well. Although I do see in recent reports that the bank is forecasting up to a 70% decline in profits as a result of bad loans brought upon by the COVID pandemic. So not even the strongest brands are immune in these climates. I thought I'd pull down some highlights from our research this year, and just remind you that this research was conducted pre the COVID pandemic. So on the left-hand side, you can see some key metrics: familiarity with the brand, preference for the brand, overall reputation, perceptions of value for money, perceptions of customer service, and perceptions of innovation. You can see that FNB and Capitec are dominant forces within the banking industry, as are Outsurance and Old Mutual in the insurance industry. Vodacom being the strongest brand in South Africa, it's no surprise to see them topping the majority of the metrics within the telecoms industry. But perhaps interesting to see that despite the turmoil that SAA has undergone in recent years, it is still the most preferred airline to fly with among South African consumers, which we thought was a pretty interesting finding. To unpack a little bit further, it's worth highlighting that our research does not only cover South African brands of origin, but it's also assessing international brands that are operating within the borders of South Africa and within a South African context. So Emirates, for example, you can see it's highly reputable. It's the 2nd most reputable brand that operates in South Africa. Provides excellent customer service as well. However, because of its origin in the Middle East, we publish its value within both the airlines table and the Middle Eastern ranking table. So the brands you see in the South African context are all brands of origin in South Africa. So I'm now going to hand back temporarily to Jeremy to introduce this new concept that we mentioned earlier of nation branding and soft power.
Thanks, Dick. If we can have the next slide. Basically, some of you will know that in the end of February this year, we had a soft power summit in London at the Queen Elizabeth Centre. And you can see there on the left the brochure that was produced, which you can actually access on the Brand Finance website. You can see some of the speakers there. Some of them won't be known to you, although perhaps if you go to the top row, second to the left, Seb Coe, the well-known athlete and head of the Olympic Committee, is there. And he was a fascinating person to listen to. Top right is a gentleman who was head of the BBC Overseas Services. So he was very, very interesting. Bottom left, you might all recognize David Haig, of course, who was the founder of Brand Finance. And he and I were colleagues together at Interbrand way, way back, 25 years or so ago. And then the keynote speaker, bottom right, was Mr. Ban Ki-moon. And of course, you would remember him from the United Nations. And he gave a fascinating address about the importance of soft power. Some of you will know the difference between hard power, which is when perhaps you declare war on someone like Mr. Stalin or Mr. Hitler, or you coerce people through economics. And then soft power is the gentler approach. If we have the next slide, you'll see that the definition of soft power is the fact that it's a nation's ability to influence preferences and behaviors in the whole international arena through a whole range of activities and segments. And the fact of the matter is that why is it important and relevant? Now, brands can leverage the strong attributes of their nations through the soft power. And Declan is going to go on and talk about the different pillars of that. But before he does that, when you actually think of the impact of COVID at the moment and how countries are actually handling it, does it influence their soft power rating? And I think at the moment, South Africa is being very strong and doing very well. And sadly, perhaps at the other end of the axis at the moment is the United States, which seems to be having difficulties getting on top of things. So soft power is a very interesting concept. It's absolutely fascinating, and it shows how nations are actually measuring themselves against other nations. And we've actually been approached since this summit at the end of February by some countries who say, right, we want to improve our rating. Please work with us over the next 5 or 10 years to improve that rating, because then it will attract more business, more commerce, more inward investment, all the things that will make Brand South Africa salivate at the thought. So over to you, Declan.
Thanks, Jeremy. So I'm just going to unpack the methodology and some of the results for you. So the research for the soft power study covered 54,000 respondents among the general public, as well as a selection of 1,000 that formed part of a specialist audience, so academics, for example. The research covered 100 countries worldwide to ascertain responses, but we in fact only focused on 60 subject countries to rank. As you can see on this slide here, we assess soft power using 10 pillars. So these pillars are familiarity, reputation, and influence as key pillars. We then also assessed various other pillars that contained sub-pillars within them. For example, on the far right-hand side of the screen, within the pillar peoples and values, we assessed generosity, funness, friendliness, trustworthiness, and tolerance of the specific population in question. And what we tried to do was take a broad view of all elements within a country that impact a country's soft power. As you can see on this slide, the United States is the top ranked country by soft power. For reference, South Africa is ranked 36th, so that's 36th out of 60 countries that were ranked. Germany, the UK, Japan, and China then make up the top 5, with France, Canada, Switzerland, Sweden, and Russia making up the rest of the top 10. It is worth noting the contrast between some of the things Jeremy mentioned, like hard power and economic power, and that of soft power. So if we look at economic power as expressed by GDP, you can see that India, for example, they are ranked as the 5th largest economy in the world according to GDP. However, they only rank 27th according to our soft power rankings. So hard power and economic power do not always necessarily translate to soft power. By contrast, you can see a country like Switzerland ranked 8th. They are very small economically, and have very little hard power, yet they rank 8th in the world in terms of soft power. So as mentioned on the previous slide, South Africa is ranked 36th out of the 60 nations researched and ranked. Key attributes for South Africa, I've highlighted on the slide here, are familiarity, where we rank 28th, influence, ranked 26th, and international relations, ranked 31st. Individual metrics within these specific categories where South Africa performs best are, firstly, South Africans are seen as easy to do business with, so that's ranked 20th in the world, which is positive for all corporate brands in South Africa. Secondly, South Africans are seen as leaders in sport, so that's ranked 17th in the world. And thirdly, South Africans are viewed as friendly people, ranked 24th in the world. However, it is worth noting that South Africa ranked only 37th in governance. You can see just above international relations there. And this is largely due to recording a particularly low score for ethical standards and corruption, ranking 53rd out of 60. So I think what this tells us, and Petrus mentioned this earlier, we need to ask the question, is there an opportunity for South African brands to leverage some of the inherent strengths that exist within the South African national brand itself to help support their own brands and their own businesses? And we would strongly argue that is the case. Another interesting slide for you. So what we have done is modeled country reputation on the y-axis and country influence on the x-axis as researched among the general population. So from a BRICS perspective, soft power influence globally is restrained by relatively poor reputations across all of the countries. You can see that BRICS nations are below the trend line here, and the trend line is the intersection of reputation and that is potentially harming its ability for BRICS nations to have further influence on the global landscape. And just to highlight the point that I made on the previous page, you can see Switzerland just at the top of this slide here. They have an extremely high reputation for such a small country, but perhaps they are not utilizing that reputation effectively to have greater influence over the global landscape, and move that little dot further down the right-hand side of the page. So we've mentioned this reciprocity and intersection between corporate brands and nation brands, and there is a reciprocity between brands using strong national brands for their own causes. But equally, corporate brands can have a huge positive impact on the national brand itself. So if you take the Singapore Girl, for example, I'm sure many of you are familiar with the Singapore Girl. It's now synonymous with both Singapore Airlines and the country itself, and represents the airline's heritage, history, and branding, which is so deeply rooted in the national identity of Singapore. VW are another great example, as are the likes of Mercedes, BMW, and Audi. They all use this perception that German engineering is superior to other countries in order to sell their cars. In a South African context, the Springboks are obvious brand ambassadors that come to mind. It's amazing how often the Springboks are the first thing that come to mind when meeting people in different countries worldwide. From a corporate perspective, Old Mutual, we think, has managed to leverage its heritage and roots in South Africa to expand into now operating in 14 markets throughout Africa, where it uses the relative strength of the South African national brand, as well as its African roots to do business across the continent. So we can't talk about South African soft power and South African corporate brands in general, I think, without examining the potential impact of the COVID pandemic on all of these brands. And Winston Churchill once said, "The farther back you can look, the farther forward you are likely to see." So it is key to understand that there are so many lessons in historic crises that we should learn from so as to not repeat the same mistakes that other brands have made before us. And this is why in this next section, we will review some publications and studies that illustrate two lessons. The first is the link between the strength of your brand and business performances during crises. And the second is the link between investment into the brand and brand strength during crises. So at Brand Finance, we've been tracking brand values continuously since 2007 when we first launched the Global 500 ranking of the world's most valuable brands. We have tracked how brand values have fluctuated during three major economic downturns. So that would be 2008, 2009, 2012, and 2016. And what we learned is that through this analysis is that strong brands, as measured by the Brand Strength Index, perform better during crises, irrespective of whichever sector they operate in. So if you look at brand strength specifically, over the period from 2008 to 2019, the consistent 100 biggest fallers in value, so losers in brand value, had an average brand strength score of 66 out of 100. While the consistent 100 winners, so gainers in brand value during this period, had an average brand strength index score of 72. And this finding is in line with other research that we've conducted in-house, which correlates brand strength with overall stock market outperformance. So AAA rated brands, very strong brands, as measured by the BSI, consistently outperform the S&P 500 year on year. And Brand Finance has now collaborated with two index providers to create indices that equity investors can invest in based on these findings. In March, Brand Finance conducted analysis categorizing potential sector-specific impacts as a result of the downturn caused by the pandemic. So you can see in the red bar chart here, according to returns between January and March, sectors such as airports, oil and gas, and hotels were particularly badly affected. On the far left-hand side of the screen, sectors such as household products, utilities, telecoms, and food were only really affected so far as their supply chains were severely impacted. We subsequently recently extended this analysis to assess the rebound or recovery, if you will, occurring between March and today, July, which is seen in the green line chart. So sectors such as technology, spirits, and leisure and tourism have performed well as the global lockdown has eased. In a strictly South African context, so not just a global view, between January and March, the retail sector, banking sector, technology sector, engineering, and mining sectors experienced severe declines. Again, you can see that in the red bar charts on the far right-hand side of the screen. However, as you can see by the green line chart, between March and July, these sectors are now making strong recoveries. However, when combining all of these numbers together and viewing the entire picture of performance between January and July, we can see that the majority of sectors have not recovered to levels last seen in January. And the likes of airports, oil and gas, and hotels are still suffering extensively. Some sectors, such as technology, commercial services, and spirits, are in fact performing extremely well, better than they were performing in January, in fact. I'd just like to take this opportunity just to remind everyone that they can use the Q&A tool that you can see at the bottom of your screens. Feel free to put forward your questions there, and we will look to answer those during the Q&A session at the end of the presentation. So that brings me neatly into the question is, well, how do brands deal with the crisis, and how can one grow brand value both during and post the COVID pandemic? Many of you on this webinar, I think, will have experienced cuts to your marketing and advertising budgets over recent months. However, there is an argument that this is the incorrect approach. So just intuitively, we have 3 points to raise. So the first is that the cost of media usually decreases during recessions, as many people are cutting back their advertising expenditure. So that means advertising is cheaper for you if you continue to do so. Secondly, often consumers are more receptive and have more time to absorb brand messages. And I think that's been the case as the world has been on lockdown. Thirdly, if the messaging is appropriate, it can have a more powerful emotional effect. And I think brands always need to have a fine balance between being both functional and emotional. And hitting that sweet spot is the key to a brand success. So what is the advice for marketers? The idea is to try and spend essentially where your competitors aren't. And as mentioned in the previous slide, during economic downturns, the immediate response from most businesses is in fact cost cutting, which inevitably means marketing budgets are the first to be reduced. But there is overwhelming evidence in favor of maintaining or in fact increasing your marketing budget during these times. So a study I'm going to reference, a McGraw-Hill research study, it assessed 600 companies in an economic downturn and found that the businesses that maintained or increased their marketing expenditure increased their base revenues, so their sales and potentially prices as well, significantly once the economy had recovered. Further evidence is provided by Les Binet and Peter Field, and many of you may recognize those names. And they suggest that when share of voice is larger than share of market, you actually grow your share of market and subsequently your brand. So intuitively, this makes sense. Again, spending where your competitors are cutting back enables a greater potential impact for your brand versus normal circumstances. And I think a neat way to highlight this is A.G. Lafley, who's the ex-CEO of Procter & Gamble, and he used to say that they had a philosophy and a strategy, and that's when times are tough, they build market share. And I think a lot of brands can learn from that. So now we know that brand investment is in fact important. The next question is, which attributes should you be investing in your brand? So I want to bring your attention to a study conducted by some of our associates and verified by ourselves. And that says that in 65% of the cases, consideration for a brand forms the closest link to base revenue, where a growth in consideration causes a growth in revenue. So therefore, the logical question is, in order to grow your brand, how do you grow consideration? And what I've done is I've looked specifically at the banking sector in this case, because as you saw from earlier slides, it's the largest sector in the economy in terms of brand value. And I think intuitively it's easy for everyone to understand the banking sector in a South African context. So what I've got on the left-hand side of the screen are all attributes, both functional and emotional, that Brand Finance has researched in the banking industry in South Africa. And often the problem with research is that there's huge correlation between metrics. So it's very difficult to determine which attributes are in fact important and which are not. So what we did was a statistical analysis where we could group these metrics together. And what I've done is I've grouped these metrics and labeled them appropriately. So this makes it easier for marketers to make sense of data. So take this green bucket on top, for example, being easy to deal with, having good customer service, caring about the community, being popular with friends and family, value for money, and being transparent. I've called these consumer champions. And I've done the same in 4 buckets, being consumer champions, innovation, being profit hungry, which is a negative bucket, and what I've called digitalization and product range. And what you can do is statistically model the effect that these attributes have on consideration for your brand. So what we found in a banking context is that Consumer champions have a 0.8 effect on consideration, where an improvement of one factor in consumer champion increases consideration by 0.8. Innovation is 0.3. Being profit hungry has a negative effect, in fact, and very small. And digitalization and product range have a 0.56 impact. And what that allows us to do is to plot these consumer champion performance metrics versus consideration. So on the y-axis here, we have consideration for all the banking brands. And on the x-axis, we have consumer champion performance. And what you can see here is that Capitec are really seen as the consumer champion within the banking industry. So remember, some of those metrics is providing good value for money, providing good customer service, caring about the wider community. Capitec seems to own this space, and as such is extremely highly considered. Now, one thing worth noting is First National Bank in the center of your screen there. You can see that they've got a very high consideration, but it's not because they are seen as consumer champions. In fact, they are seen as digital leaders and have a very wide product range, whereas Capitec has now shifted towards the center of the page because they are not viewed in the same light. So ultimately what this says is that Capitec and First National Bank should not be trying to play in the same space because they are great brands for different reasons. And I think there's a lesson to be learned for all brands in all sectors. You need to find out what your consumers want, why consumers like your brand, and then deliver on those wants and needs of the consumer. So I think finally to end off, we have 5 pieces of important advice for brand owners going forward, both through this pandemic and beyond. So the first is get out there and communicate, particularly now while your competitors are not doing so. The second is make sure your messaging and tone is right. Naturally, you don't want to communicate for the sake of communication. And in an age of social media, if your messaging and tone is incorrect, your brand could pay a severe price for that. The third is find out what your consumer really wants and try and deliver to that. So think about those attributes we just looked at in the previous slides. The fourth, in this age, and particularly during these circumstances, is to nurture your digital presence and grow it. After all, we are in the world of an online revolution, and social media is king. And fifth is don't be afraid to implement short-term changes to the business, whether that be price changes, product changes, or placement changes, as you could see your share of voice and therefore share of market grow into the future. Thank you. So I think we will now take questions in the Q&A box. Just a reminder to everyone, if you would like to ask any questions, please use that Q&A box that you can see in, I think it should be the bottom of your screen.
Perhaps I can ask a question of Petrus. As I know, Petrus, you work a lot with the BRICS community. Do you see at the moment much contact between the other nations about how they're managing the challenges of COVID-19 so that you're comparing notes with each other?
Yeah, no, I do think on a you would say, if you look at the president's activities in his capacity as chair of the African Union, for example, in the last number of months, he's been very focused. I know the domestic job is very taxing, but the team in the presidency, and we also interact there quite regularly, a lot of work happening on the bilateral and the multilateral front in the context of the AU and also in the context of the BRICS. I think the BRICS, there's a lot of exchange bilaterally between countries, but also lessons being built up. So I do anticipate that the BRICS will also in the coming months have more of a position that they will take. I know the BRICS summit was actually supposed to take place now as we speak in June, July in Russia, but of course due to COVID that's also been postponed. But I do anticipate, and maybe on that point, Jeremy, I think what's very interesting on your work on soft power, fascinating and really interesting. But I think in this period also we need to keep an eye on the issues of multilateral solutions. I think challenges to the World Health Organization do not help. Challenges to the kind of global governance structures that we have in place to mitigate and to protect against, I would say, escalation of fragmentation of the world system is very important. So I think thanks for that soft power work, really interesting. But I think on the multilateral front, there's a lot of work happening around COVID.
Yes, yeah. Yeah, no, thank you for that. Have we got any questions coming through? Yes, I see one. Dec, are you going to take that?
Yeah, sure. So we've got a question from Chris Gilmore. And the question is, Castle Lager is still a very strong South African brand. Does its parent company, AB InBev, have a strong brand presence in South Africa or anywhere else for that matter? So this is a very good question. You'll know that Castle was originally owned by and started by SAB Miller before the AB InBev acquisition. So AB InBev, like many corporate brands and parent brands, if you will, don't overtly state their presence too strongly on many of their brands. But I think people shouldn't really underestimate the power that these parent umbrella brands can have and the influence these brands can have. So companies that I can think of off the top of my head are the likes of Unilever. So, you know, many of your household products and items and cosmetics are made by the likes of Unilever, and they use very subtle brand and product placing of the Unilever logo and broader messaging, particularly around sustainability and other ESG issues. And what that does is help strengthen and add value to the brands within their portfolios. Other brands that do the same are the likes of P&G, Nestle within the food space do a similar thing, and to a slightly less extent, AB InBev do that with all of their products.
I can just add to that working with South African breweries back at round about the end of the last century, it sounds a long time ago, 22, 23 years ago, when Graham Mackay took over, one of the exercises we did was to create a corporate logo for SA breweries, and as an exercise, put it on the packaging of every single brand. And in those days, Castle was, I think, 4 sub-brands: Castle, Light, Milk Stout, etc. And when we actually presented it, we almost had, I think you call it a punch-up, because everyone was so furious that anyone would dare think of putting a corporate brand onto sub-brands like that. And I think Mr. Chris Gilmore would be aware of that. We've got another question has come in asking if this deck will be available to everyone. Just to let you know that anyone who's signed on, whether they're actually watching or not, later today or first thing tomorrow morning, you'll be sent a recording of this entire presentation, and you'll be sent a copy of the full brand finance report. So you're going to get 2 things, but all the material will be on it. So you'll be able to actually go back and run through things. And then, of course, if you have any questions, you can actually contact any one of us directly. Another question I see that, in fact, Chris Gilmore has sent through another question. Again, Dec, do you want to take this one?
Sure. So just for those of you that can't see it, Chris is asking, I've noticed that SAA appears in Brand Finance's top rankings over the years. How do you explain the apparent dichotomy between SAA's poor media representation and its strong branding perception? Again, this is a very good question. So I think what we are actually seeing is a difference between how the brand is viewed from a consumer perspective and other stakeholders. So what our research is showing us over the years is that SAA as a brand among consumers is still inherently very strong. They are still providing a good service to those people using the brand within South Africa and along the international routes. However, across other stakeholders, the brand is not performing particularly well. And that's largely around perceptions of, you know, wastefulness of resources and mismanagement. And I think the media is often portraying that aspect of the brand. and the investor population is looking at that aspect of the brand without really looking at the consumer experience of the brand as a whole.
I think, again, to add to that, for those of you not in South Africa, you might not know that at the moment, SA Airways is in business rescue, and there's a lot of debate about whether it should be supported going forward by government or whatever. But of course, there is a huge counter-argument that it's the flying billboard for South Africa around the world. And again, Petrus, I don't know if you would like to add to that, because a lot of people say SA Airways is our best advertising drama, if I can say.
Yeah, no, for sure. We cannot underestimate the importance of having that tail wing, that, what do you call it, the tail branding in broad terms. But I think to the question that was asked, you know, if you look at, I've noticed that SAA's, it's in the top rankings. However, there's poor media representation. You know, I don't know, maybe I'll make a personal comment. You know, it's just maybe a gut feel I have around that. I think the appeal of a South African Airways, I remember one day flying a few months ago, and there was something that went wrong on some SAA flight. I think it was in the early months when they started cutting back on some routes. And I speaking to some guy who was delayed in the airport, and he said, man, I'm flying British Airways today, but quite frankly, I prefer to fly SAA, even if they cost me more. You know, that's just the way it is, you know, his approach. And I think there's a lot of people who think like that, you know, so I think we all have at some level, a bit of an emotional attachment to the idea of that brand and what it signifies. And then, of course, it's tragic to see what is happening in the reality to the actual airline. So I think when it comes to brand association, brand, one would say kind of affinity, SAA is maybe an interesting case study in that way, you know, that regardless of a number of challenges, the brand in itself still carries some affinity, some appeal. I don't know if I'm making sense, you know, I'm just talking off the top of my head, but I do think it's a very interesting question to interrogate in maybe more detail as to what happens in a case of, you could probably even go corporate brands. You know, sometimes I think some things go wrong, very wrong with some corporate brands, yet at a certain level, the kind of natural affinity that customers or stakeholders have will still give it a bit of a pull in the market. I don't know.
It's interesting as well that they say that one of the side effects for all of us who've been through lockdown or going back into lockdown is that we support our local communities, our local shops, and that sort of thing, so that we don't travel far from our homes. And apparently that's been extended more and more to the fact that sometimes people are feeling more patriotic, if I can call it that, and less global in their attitudes. It's probably early days yet, but perhaps it's that localization, if I can call it that, has a beneficial effect as a for SA Airways going forward. But one is reminded, of course, of Swiss Air, I don't know, 20 years or so ago, which when it went bankrupt, they actually found that the main assets of the airline were its trademarks. And again, its Swissness, because as Declan was saying earlier, it rates very highly Switzerland as a country in certain metrics. And Switzerland still has a fantastic cachet for safety, etc.
Yes, yeah, no, for sure. I do think on that topic, you know, that you touched on the nature of our orientation as humans. You know, I do think we're into a period of not just serious challenges to the paradigm of globalization. I hinted at this in my piece, you know, where I said, look, at a very concrete economic level, you could look at manufacturing supply chains in the African environment. But the bigger question we're confronted with is this one on what is the nature of globalization going forward? What is the nature of human movement, not just within countries, but also at a global level? But then where does the digital economy come in to drive a certain dimension of another paradigm of globalization? So I think as corporates and as we design strategies at a country and corporate level, I think there's several interesting intersecting human dynamics we're going to have to watch. It's human behavior in the street, as you say, in your community. How do you embed brands or activities, business activity at that level? Because people will, I think, naturally already, we've seen dynamics in the world that in as much as we've become globalized and integrated, the irony is post-Cold War, post-1990, global conflict is increasingly driven by difference in identity. That's the strange thing. In as much as we think we're getting more integrated, we see an escalation of conflict dynamics that fragment people. So I think those kind of constructs of movements, of mindsets, and in the digital economy will be fascinating and important to watch. And I think much more complex for corporates to predict things like consumer behavior in the midst of all that uncertainty.
Yeah, absolutely. I see we've got a question from Darren Graham, who of course is from proudly South Africa. Dec, do you want to talk about this localization versus globalization at all?
Yeah, sure. So the question for those who can't see the Q&A tab is, should local brands be leveraging their local credentials at this time and promoting themselves as contributors to countries' economies and job creation? Is this a meaningful attribute worth pushing? What are the opportunities for proudly South African companies, proudly SA companies? So the short answer in our view is yes. We've done a lot of work around the concept of nation branding and corporate brands leveraging off of that, and we showed a few examples in earlier slides. Some other work, particular work we've done is for the GREAT organization, so that's Great Britain. We did a lot of work around that campaign, and overwhelmingly it shows that the association with countries' attributes and national attributes has a positive effect on local consumers. So a study that I can quote again is we did some research in the UK around this GREAT campaign, and 3 out of 4 UK consumers were more willing to purchase from brands that had a national identity and one that was explicit in their marketing activities. Some of those brands were highly associated because of their association with Great Britain and the UK. Top of mind for consumers was the fact that those brands were of high quality and had good history and heritage. And those things, those two words, tend to go hand in hand with Great Britain in general. So from a proudly South African perspective, it's about finding what attributes organizations can benefit from that South Africa shows and exhibits, and to explicitly utilize that in your campaigns going forward.
Declan, if I may connect, sorry Jeremy, am I interrupting you?
No, please, Petrus, I think.
No, to connect with what Declan has said, I think it's spot on, and I do think where I would really encourage that, that companies, whatever your size, whatever your sector, whatever you're engaged in, I think we must always see also economic activity, business activity is a social contributor. There's employment that happens, there's a social good to it. Now, of course, you get really bad business practices, that's normal, that's human. However, where your company is geared, where you are making a particular kind of a contribution, go for it and tell those stories. I think, in fact, we need to tell those stories more. I think just in the corporate South Africa, if you look at the top 50 brands that Brand Finance is announcing here today, I'm sure you can go and do other work on understanding the societal and then the corporate social investment dimensions of the work of these corporates. That's a big picture of contribution. And on the international front, also, I think it's very important for local brands active internationally to tell those stories. And a practical example I'm going to share with you now, we are in a process as Brand South Africa talking to a lot of our partners in DTI on building case studies. And I want to actually raise it here, and maybe Jeremy, and through this platform, if there are some of the South African companies listening who are active in the African continent, we are in a process of building case studies of South African corporates in the African environment, investment in particular economies, and the contribution that those have been making. The companies talk about it, but I don't think we have enough information to give that bigger picture, you know, and that links to the same question. Local brands, yes, tell your story locally. However, if you have an international footprint, we need to do much more in emphasizing the tremendous role that South African companies have played in not just the African region alone.
Well, absolutely. And you know, a lot of key words are coming out of this presentation and out of other presentations at this time. You want your brands to be embracing digitalization, otherwise they're not going to survive. They've got to be authentic, but all the time they've got to remain trust marks because the basics still apply. So it's very, very interesting how, while some things change, other things don't change at all. Now, I've just been sent an SMS that we have a question on banking, but I can't find it on my screen. Dec, it would be one for you, but have you come across that question? Is there anything, in fact, you want to add to the banking section? Because it is quite interesting, as you were saying earlier, how you have Capitec leading, but in a totally different area to someone like FNB. You have someone like Investec coming up quite strongly this year, as in fact as Nedbank. And then when you have one of the, if I can call them new upstarts like TimeBank, rating there quite strongly as well. Do you want to add any comment to that? Because I know banking is particularly your area.
Yeah, sure. I see we do have a question from Sydney asking whether the exercise expressed or shown on screen there for banking is available for other categories and industries. In short, yes. We have the data to produce that analysis. I did that analysis. I just haven't done it for the other industries, to be honest, but it can be produced. Yeah, Jeremy, just to touch on the points that you raised there. I do think that things like this word digitalization, for example, is being thrown around a lot, but at the same time, digital capabilities are the tool through which your brand can operate and not necessarily your brand as a whole. And what we can see is that different brands are strong for different reasons. And perhaps I should go back to the banking slide to illustrate that. What makes one brand highly considered amongst a certain set of consumers is not necessarily the same as what another brand is considered for. And it's about a brand identifying among different consumer groups what is it that they want from your brand, and then trying to deliver against that. Now, there will always be attributes, I think, that are universal, if you will. And these are attributes in banking, for example, like trust. It's very important that consumers trust your bank with their money. So that's a given. And that can apply across all product segments, all geographies, and all customer segments. Not all customers want the same thing as one another from their bank. Some want good digital capabilities. A lot of people still want to walk into a branch and be comfortable that they can walk down the road and speak to a bank manager. So for a bank, and not just for a bank, but for any brand and operation, it's really about knowing your customer, their wants and needs, and then trying to constantly deliver to that the whole time.
That's great. I see we don't have any other questions coming through, so I think probably now is the time to wrap things up. Petrus, do you want to add anything, or are you happy that we close things? Before I give thanks, anything to add?
No, I just want to say thanks, Jeremy and Declan, and I hope our attendees or participants learn something from this. And I think maybe just lastly from our side, thank you for the partnership and sharing this very rich information. We make a lot of use of it, as you know, in different forms. But also maybe just very lastly, thank you again, to I think the broader South African business community. We are in very unpredictable, turbulent times with a lot of risks. However, as they say, when times get tough, the tough have to get going. So let's just keep on moving ahead. Thank you very much.
All right, well then I am going to close off now. So what are the things I need to mention again? Congratulations to all the top South African brands that have done so strongly in very, very difficult conditions. As we've heard repeatedly, they are so crucial to the revival of the economy and acting as ambassadors around the world. Thank you to everyone who's been involved in this. Thank you, all of you who are sitting at home or perhaps in offices who've been with us this afternoon. We hope you found it interesting. We look forward to your comments. And as I mentioned, you will be receiving a full recording of this and the brochure. Thank you to my colleague in London, Declan, and his team who helped put together the rankings, the team who put together the brochures, the PR team. There are too many to mention there, but Brand Finance in London has a whole team, and it's been particularly difficult over the last few weeks because some were on furlough. It's a concept I don't think we quite understand in South Africa, but when you've got people who are away from the office and are actually told not to communicate, it gives one some challenges. But I think despite that, I hope you will all agree we've had a very interesting session. We've got some fantastic results, some fantastic research, and let's all take it forward to make South Africa even better than it could be. Thank you all very much.